Hello everyone, I am Shreya from Stocks Academia. Today we are gonna learn about types of charts used in technical analysis. So, before getting started, let's first understand what are charts. A chart is a graphical representation of price and volume movements of a stock over a certain period of time. In the graphical chart, X represents the time period and the Y represents the price movement. The time period can vary from intraday to a few months or more. Now, let's talk about charts and their use in the stock market. So basically, there are three major principles in technical analysis. First is, the stock price already reflects all the relevant information in the market. Second, stock prices tend to move in the trends. And third one is, history tends to repeat itself. Now, let's look into the types of charts. So, actually there are many charts used in technical analysis, but I am gonna explain you the popular one. First one is line charts. A line chart is probably the most common type of chart, and this chart tracks the closing prices of the stock over a certain period. Even closing price point is represented by a dot, and all the dots are connected by a line to get the graphical representation. While it is considered to be a quite simplistic, like compared to other charts type, a line chart helps trader to spot trends in the price movement. However, since it tracks closing prices, it does not offer much information regarding intraday price movement. Second one is bar chart. A bar chart is quite similar to a line chart. However, it offers much more information instead of a dot, and each plot point in the graph is represented by a vertical line. This line has two horizontal lines extending from both the sides. The top part of the vertical line represents the highest price point at which the stock had traded during the day. Similarly, the lower part represents the lowest traded price. The left extension represents the price at which the stock opened, while the right extension represents the closing price of the day. In addition to offering greater detail than a line chart, the bar chart also gives insight on volatility. If the line is longer, it means that there were greater volatility in the trading of the stock. Now let's talk about candlestick chart. Candlestick charts are very popular. They offer a great deal of information in a very precise manner, as the name suggests. So the price movements for each day are represented in the shape of candlestick. It is similar to a bar chart because it represents the four data points: high, low, open and close. In addition, the candlesticks come in different colors based on the price movements. A falling candlestick is generally represented by a black or red body, while a rising candlestick is represented by a white or clear body. Let's talk about fifth chart, which is Kaneshi chart. Kaneshi chart is another type of popular technical chart that is originated in Japan and is quite similar to the candlestick chart. With this chart, you can visualize the uptrend and the downtrend quite clearly. When there are continuous green HA handles without lower shadow, it reflection of a strong trend. On the other hand, when there are continuous red handles without upper shadow, it reflects a solid downtrend. As the HA bars are averaged, there is no exact open and close price for a particular period. Now let's talk about sixth chart, point and figure chart. One of the most common type of chart in technical analysis is point and figure chart using vertical rows of X's and O's. When price of a share goes up, it is indication in the row of X's. On the other hand, when it goes down, the same is the indication by the vertical row of a O's. This chart for technical analysis is easy to plot and the patterns are easy to follow. So as a trader in the stock market, it is very important for you to able to read a chart and understand the information that is represents. This can you help identify price pattern in the stock market and make better trading decisions. So guys, thank you so much for watching the video. We'll see you in our next lesson.